Three topics on today's episode. First, we're going to take a quick look at SoFi's stock price is down over 9% as I am recording this episode due to the company giving an update after the overall federal extended the student loan payment plan. Next, we're going to take a quick look at Unity. This stock price is down close to the low 90s right now. Is this a buying opportunity, and what are some risks sitting with the stock? Finally, the overall tech market continues to go down for numerous reasons, and we're going to take a quick look at why and some price actions in the semiconductor industry, most importantly with NVDA. So let's get started. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. As I am recording this episode, SoFi right now is down over 9.3%, sitting at $7.94. Unfortunately, year to date is pretty much what we've seen in most growth stocks and just the overall market right now. Year to date, the stock is down almost 50%. And let me know in the comments below, guys, why are you guys excited with SoFi right now? I have no position in SoFi, but I'm neither a bear nor a bull. I 100% believe that they have huge growth potentials. I mean, the numbers of members that they grow per quarter is insane, but would like to hear more from yours. What are some of your bullish or bearish cases for SoFi? So we can see yesterday, April 6th, SoFi updated their 2022 annual guidance to reflect the latest extension of federal student loan payment. So previously, the kind of extension that has been extended numerous times was expected to end on May. Now that has been extended until August 31st. So we can see right now, management has updated their 2022 guidance to assume that student loans will not in fact end during the course of 2022. The reason being is that management expects a number of factors, including the impending fall midterm elections, will precipitate likely to more than a seventh extension beyond August 2022 by the administration. So SoFi is trying to say, hey, this is going to be somewhat of a political push during the midterms, and can, even though they are extending it right now to August 31st, there is going to be the management believes there's going to be reasons for it to actually last for the full year. So they accounted for that. So now if we take a quick look at the numbers, I don't want to say they're completely horrible. They adjusted net revenue to be about $1.47 billion for 2022. And that is compared to the previous guidance of $1.57 billion. So for the full year guidance, management believes they're going to lose out on about $100 million in revenue. Because of this, they are also reducing their adjusted EBITDA guidance to $100 million, down from $180 million that they had before. So management believes that they're also going to lose about $80 million in adjusted EBITDA because of these changes. SoFi does maintain the original guidance for quarter one, and makes sense, right? Quarter one was already kind of intact with this overall move that was happening right now. So there should be no major changes for SoFi or management for quarter one. I want to thank the Motley Fool for sponsoring this video, and keep listening for this great offer we have for the community. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you a discount for one of my favorite services the Fool offers, the Motley Fool Stock Advisor. Go to fool.com/Jose to sign up and get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor has been a market-beating service. So what are you waiting for? Thanks again for the Motley Fool. Now on to today's points. The CEO also mentioned that even with the assumption of no end to the moratorium, in 2022, our new full year 2022 fiscal guidance still represents a 45% year-over-year adjusted net revenue growth and triple of adjusted EBITDA and doubling margins. So the company says, CEO has mentioned, yes, we're kind of lowering guidance, but we believe we are still a strong company right now. So let me know in the comments, do you guys believe $100 million loss for the full year equates to about a 10% drop on stock price, or is this an overreaction at the moment? The second stock I want to take a quick look at is one of my favorites. This is Unity Software. You guys know I'm big in the gaming market, but I'm also really big in software and kind of the toolbox scenario. I believe Unity is a great kind of tool for that. So Unity right now is sitting at $93.15. And like I said, the overall market has been insane. If we take a look from the peak, it's down about 14% 4% for the 5-day week. So it's crazy how this market is extremely volatile. So Unity, I mean, there is some good news. Today on April 7th, Citigroup initiated coverage on Unity software with a buy rating. They also announced a price target of $125. Some negative things for Unity. Epic launches their Unreal Engine 5, and I've done a few episodes on Unity and how kind of there's competition out there, but I want to say the only true competition I see in the market for Unity is that other game engine, and that is Unreal Engine, created by Epic Games. And Epic Games has partnerships and is owned by Tencent. For example, a good portion is owned by Tencent, and Tencent, they own numerous video game publishers, so they can obviously push those publishers to use Epic's Unreal Engine. So I want to say that's the biggest risk in my opinion. At the moment, Unity is still by far the leader, especially in mobile, especially in like the casual gaming stuff. So not something I would worry, but definitely something to keep in mind of. Anything below $100 is when I definitely keep an eye out for Unity. I already did the stocks that I'm planning on buying this week at the beginning of the week, right? I did the episode on Sunday. So Unity is not going to be on my purchasing list for this week. But if it stays around these prices, this is one that I can definitely see being on my list for next week. Obviously, valuation might still be a bit of a risk for Unity. Price to sales ratio forward is about 14.3. It's one of the lowest it's kind of been compared to its average. But normally, I mean, in the software market, you want something around the 10 values, right? Anything in the teens already seems a bit high. Obviously, 2020, we kind of had that crazy market where a lot of things were over 20, and we see what happens there. So even though I like the valuation, I wouldn't mind dollar cost averaging at these times. I do believe in the short term of things, these valuations can increase the overall volatility in the market. Next, this can't be an episode without Jose, me, talking about semiconductor stocks. And I just want to take a quick look at NVIDIA, right now down 2.6% for the day. Overall tech stocks are taking quite a hit. And I want to say the overall tech industry, just the overall stock market, they don't know what's happening. We're seeing news left and right. For example, we kind of continue to see sell-off due to people not understanding what's happening with the Fed or what the Fed is going to do. And unfortunately, and I want to say for long-term investors, I don't think we have to worry about things like that unless you need the money in the next year or two. And personally, I don't invest money that I need in such a short time frame. Moments like this is strong for accumulations. Right now, I'm constantly putting money into my account, constantly building my positions in companies that I believe will be super strong or stronger than where they're at right now in the next few years. So again, I do believe Fed rates and all these kind of inflation talks, interest rate talks are going to 100% affect my portfolio in the short term, maybe in the next year, maybe in the next 2 years. But for the long term of things, in the next 5, in the next many years, I don't think I'm going to come back and say, hey, I regret buying X stock at these prices when all these talks were happening, right? I do that weekly dollar cost average, and I do believe that's something long-term investors should kind of remember. That short-term noise obviously is the easiest thing to try to understand, but that long-term mentality is what can help us build that overall wealth over time. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.